Good morning, everyone. I am Kainat Chainwala from Kotak Securities Commodities Research Desk. Like every episode, we will be discussing the latest insights into commodity price moves, trends affecting commodity markets, and break down the factors affecting prices. So let's get started. So we saw that base metal prices witnessed significant increase last week, with aluminium leading the way, up nearly 5%. This surge in aluminium prices is driven by rebound in metal demand in China and signs that the government's economic stimulus efforts are bearing fruit. Also, aluminium benefited from reports suggesting that the European Union may impose restrictions on Russian imports. Copper prices continue to show bullish trends, with inventories decreasing on both the LME and SHFE, that is LME and Shanghai Futures Exchange. Also, stronger than expected economic data from China provided support. Chinese economy expanded by 5.4% in the December quarter, helping achieve a full year GDP growth of 5% in 2024, in line with the official target of nearly 5%. This growth was partly fueled by stimulus measures, which boosted Q4 growth to 5.4%, the fastest pace in 6 quarters. Additionally, China's industrial production and retail sales surpassed expectations, while the rate of decline in home prices slowed in December. Turning to precious metals, gold and silver prices have experienced mixed movements due to a strong US dollar and high US yields. The impact of Trump's policies on bullion markets could be significant. However, demand from central banks could provide a price floor. Technically, silver is seen consolidating between 89,000 and 94,000 rupees, but we anticipate a potential breakout towards 97,000. Moving on to the energy counter, crude oil prices seem overbought after a strong rally following latest sanctions by the US on Russia. Also, geopolitical risks have eased with a ceasefire agreement between Israel and Hamas weighing on prices. However, prices still closed higher for the week, supported by tighter sanctions and concerns that the incoming Trump administration might impose stricter sanctions on Iran, another key oil producer. Crude oil prices closed the week with a fourth consecutive weekly gain, driven by fears of potential disruptions to global oil flows. Now, markets are bracing for Trump's planned sanctions on Russia, with reports suggesting Trump's planned moves on Russia, with reports suggesting that his advisors are formulating a comprehensive strategy to push for a Russia-Ukraine diplomatic resolution while tightening measures against Iran and Venezuela. Talking about natural gas, prices saw a modest gain last week and remain supported by harsh winter conditions in the US and Europe. However, the market is highly volatile, with implied volatility nearing 95%, signaling an average daily volatility of over 6%. So we advise traders to exercise caution in NG. Looking ahead, flash PMI data from major global economies and US jobless claims will be closely monitored on the data front. However, all eyes will be on President-elect Donald Trump's inauguration, as markets remain on edge, awaiting cues into potential tariff and tax policies that could reignite price pressures in the US. On that note, we conclude this edition of the Commodity Audiocast and hope that you found our insights valuable. Thank you so much for tuning in today, and we look forward to having you with us again next week. Until then, happy trading. Thank you.